Hey there. Going to do a video here on showing a recommendation on recording your PPP loan in your accounting software. And we're going to go through some steps, and hopefully this will clarify or give you direction on what to do with that. One, on the side of where you put it when you get it, and then how you're going to record it as you spend, as you spend the money on allowable expenses. So I've got a template here. I first want to talk about the tax impact, because that's going to drive some of what we're going to do. Now, the legislation says that the loan forgiveness won't be taxable. However, IRS has come out and said that might be the case for the forgiveness, but there's IRS code that says that you can't then deduct expenses used from forgiven debt. So full circle, there's potential that some of this funds can be taxable. And it really just depends on how much revenue you're earning. And if that revenue is enough or more than the PPP offset of the funding, you could potentially have taxable income. Okay, we'll walk through that and see that in this video here. So knowing that, we've got really two ways to show it on the P&L. One way is to remove the expense from your P&L, and the other way is to add it as additional revenue. And I've shown that with option 1 and option 2. Now, option 1 is taking the expense and removing it. So what my assumption here is that we have $40,000 of wage and benefit expense that would qualify under the PPP loan. Now let's kind of go over that real quick. PPP loan, we have wages, we have retirement, we have health insurance, maybe other insurance, we don't know, but health insurance for sure. We have state unemployment tax. I'm not sure if I said retirement, but that's included. So you have those expenses that get rolled in here. Okay, and then occupancy costs, you have rent, perhaps you have interest payments and utilities. Okay, so I'm assuming that in this current month, the allowable expenses that you spent are $40,000 and $5,000 in each of these categories. Now, option 1 would be to report in your P&L by removing those expenses. So you spent this money, but you can't report it because at the end of the year, you can't deduct it against your revenue. This results in a $1,000 net income. The other option, and the option that I recommend, is leaving your expenses as they are and then showing other income. And it gets you the same spot, but what it does is it allows to keep your expenses not hidden and reflective of what was actually done. And I think from a management standpoint and trying to make decisions, this gives you more insight on what truly happened. And then and it keeps us looking at a true operating profit. And then, of course, this is just additional funding to help float us. And then it gets us to the same net number. So that's what I recommend. And it also, for if you're reporting the dashboard numbers to MedMan, it also, it doesn't clutter revenue with medical revenue or ancillary revenue or things like that, because it certainly isn't. And it doesn't distort your expenses. And I think that's important for us. So if we leave it here, it really doesn't impact any of the dashboard numbers that you're uploading on a monthly basis. And that's the intention. That's the goal in my mind. So let's look through this on how it actually looks in your financial statement or your chart of accounts. Now, we're going to kind of go through some accounting. So bear with me here as I'll probably bore you. But let's, for example purposes, in April, at the end of April 30th, you get $100,000 in PPP funding. The correct entry is to add that, of course, as a deposit. So it's going to increase your cash. And then you're going to credit a loan, because that's what it is. You all signed loan documents. You have a loan until it's forgiven. So it's not revenue yet until you start spending it. And so you have an increase of cash, and then you have an increase or creation of a loan. Okay, let's move on to the next month, where in May we have significant decrease in medical revenue. We have some cost of goods sold. Cost of goods sold, mostly in this case, are just billable supplies that we sell, and we are trying to maintain our wage and benefit. We still have occupancy costs, and we come down to a pretty significant loss. But $45,000 of this, and this is taken from the tax impact spreadsheet, of these $50,000, $45,000 are allowable expenses. So how I recommend reporting this is that we take $45,000 and add it as income, and we do that with a journal entry. All right, so we're going to credit this other income category to basically offset these expenses. But the other side of that $45,000 is going to be an additional account. It's going to be a sub-account of this PPP loan. And what it's going to do is it's going to reduce the loan. And I think that's important because now on a monthly basis, what we're doing is we're showing the reduction or what we anticipate the forgiveness, the balance not forgiven through that date. So through this month, we've spent $45,000 for the first 4 weeks. And that's allowed us to have $45,000 that we believe will be forgiven, resulting in a $55,000 balance of the loan. Through this scenario, then, you either have done this before or you're going to do it after. You're going to move $45,000 from your savings account into your checking account. And depending on how tight cash flow is, you might be doing that the same day, the day before, you actually need to spend it. So others, if you have some cash reserve, you might be doing this at month end or a week or two after, just depending on how your cash flow goes. So this balance should match the end of the month or close to it, what you have in that savings or checking account that you've put the funds in. And that was a recommendation that we had earlier. And I think it's still one that should be upheld, that should be done. Okay, so then follow through. Then the next month, 8-week ends at the end of June. And of these expenses, there's $50,000 that have been used. Well, same deal. This $50,000 is offset by a transaction here. And now we have a $5,000. Ultimately, we end up with a $5,000 loan that the $5,000 won't be forgiven, triggering it into a loan. All right. Now, if we think about the tax impact of this, because medical revenue went down so much, we're over the 3-month period, really over the 2-month period, we've got a $6,000 loss. So even though we had to remove basically $95,000 of expenses, we're still showing a loss. So, the reality is that we don't really have a taxable event here. But let's just say here is normal, and we decreased, roughly 50% for both months. Now, this definitely paints a different picture because with this extra revenue, or this that we have to report, now all of a sudden we're showing almost a $40,000 net income, which will certainly have a tax impact. And so $40,000 isn't the $95,000. And that's where I kind of say, it really just depends on how your clinic's doing and really how much revenue you're earning while you're getting additional funds to offset these. Because there's no trigger to say that you have to have revenue decrease in the same proportion that PPP funds cover your expenses. And so there's a situation where you could have taxable income, but it's going to vary, completely dependent upon these, the medical revenue, the collections that you get. Okay, so the steps that you're going to take probably in your accounting system are to create the liability, long-term liability of a PPP loan, and then create another long-term liability, which is the PPP funds used, and put that as a sub-account underneath the PPP loan. And everyone probably has some sort of other income, which is going to show below the net operating profit. You can either use the one that you already have, or you can create another one. But just make sure it's in an other income account, which doesn't put it up in your regular revenue, and it doesn't put it in the operating expenses. And that's going to allow you to, in my mind, represent the expenses and the income as clear as possible. As always, if you have any questions, reach out to me. I'm here to help.